Silver is the second most popular precious metal after gold and one of the go-to inflation investments. When I'm looking at everything that has been happening over the last few months, it feels like it's a good time to talk about silver again. What drives the price of silver, and is silver a good investment right now? If you want to know more about that, smash the like button and let's get to it. Okay, when it comes to silver, there are a few things that influence the price. First of all, like any commodity, you have supply and demand. What makes silver different from gold is the fact that silver is much more important for the industry. Gold is mainly mined for investment purposes, with only 10% of the demand for gold coming from the industry. When it comes to silver, industry accounts for almost half of all demand. Plus, silver demand is growing because of industries like renewable energy and electric vehicles. Just in 2020, 101 million ounces of silver was used in solar panels. Electric vehicles also require several times more silver than normal vehicles. Silver is also widely used in electronics and also during brazing and soldering. Basically, there is a constant growing demand for silver in the industry. In fact, this has led to the first silver market deficit in 6 years. In 2022, silver demand is expected to hit 1,112,000,000 ounces, compared to a supply of only 1,092,000,000 ounces. It's a small deficit of only 20 million ounces, but it still shows that demand has started to outpace supply. In 2021, silver demand was just 1,033,000,000 ounces, compared to a supply of 1,056,000,000 ounces. Essentially, demand has gone up by 7.6%, whereas supply has only gone up by 3.4%. Again, there isn't a massive difference between supply and demand right now, but if the trend continues, this could really start pushing the price of silver up. Demand for silver jewelry and silver as a physical investment are also going up by more than 10%, so that's yet another trend that can positively influence silver prices. I'll add the link to the resources in the description below for you to take a look too. Then, secondly, we have inflation. Commodities and precious metals are real, physical goods, and as such, their price is positively affected by inflation. If you're not sure why that's the case, well, let me break it down for you. Inflation is basically the decline of the purchasing power of a currency. Essentially, the same amount of money buys less of a specific good, commodity, or service. Therefore, in times of high inflation, investors buy more commodities to preserve some of their purchasing power, which is why these commodities are referred to as a store of value. Really, any asset that maintains its value over time can be a store of value, which includes real estate, stocks, even currency when inflation is low. Now, the most popular commodity as a store of value is gold, followed by silver. The funny thing here is that actually, gold and silver are not as strongly correlated to inflation as other commodities. However, they are still one of the classic picks for inflation hedging or safe haven during volatile or bad market conditions. That's exactly what we have right now. The current inflation levels around the world are record high. The US, UK and Eurozone are hitting record inflation levels that we have last seen 30 or 40 years ago. In January, US inflation hit 7.5%, UK inflation hit 5.5%, with the retail price index going up 7.8%, while the Eurozone and Canada's inflation rates both hit 5.1%. What's more, the current economic conditions are set for more volatility and even higher inflation. Banks have started to raise interest rates to stabilize inflation, but by the looks of it, it could be out of their control. Lumber prices are going up, wheat prices are going up, aluminium is going up, oil is going up, gas is going up. You get the point. The more these commodities go up, the higher costs will be for the companies and the more expensive it will be to produce goods. This will put a pressure on inflation and it will likely continue to rise over the coming months. This is one of the main reasons why investors are looking at gold and silver right now. If inflation continues to go up and exceeds expectations, silver and gold will perform extremely well. The third factor that influences silver prices is the gold price. Silver is correlated with gold, meaning that the price of silver tends to follow the price of gold. When gold goes up, silver typically goes up too. However, silver has a higher beta than gold, which means that it is more volatile. If gold goes up 1%, silver is likely to go up by 2%, and vice versa, if gold goes down by 1%, then silver may go down by 2%. This is another reason why there is so much interest in silver. the inflation situation could become worse, with inflation going much higher than most investors and central banks expect. In that situation, gold will go higher in price, which would also lead to higher silver prices. However, as we now know, silver is more volatile and will likely see a much bigger increase in price than gold. The final factor is geopolitical tensions. Anyone who has been watching the news recently will know that there are a lot of them right now. Like I said, gold and silver are two of the designated safe haven assets for investors. So in times of market or international turmoil, silver and gold typically go up in price. Gold and silver have been around since the dawn of civilization, so it's no wonder that investors flock to them when they are worried and want some safety. That's another reason why we have seen a big jump in their prices in recent weeks too. Now, I guess the question on everyone's mind is how high can silver prices actually go? In March of 2020, silver skyrocketed to almost $30 and has been moving between $22 and $28 since then. Most recently, silver prices were floating around $22.5, but the war in Ukraine has pushed silver prices back up to almost $26. Can we expect even higher prices by the end of the year? Well, some analysts expect silver prices to remain the same for most of the year, before falling down to $22 in December. Other analysts are more bullish and are seeing prices around $26 to $28, but they also lean toward lower prices by December 2022. Then we've got the die-hard fans of silver who are seeing prices of $500 to $1,200, but I think the chances of this happening are pretty minimal. Generally, there are not a lot of analysts who are seeing silver hitting the prices of up to $50, which we saw in 2011, and most agree that by December 2022, we will see silver starting to decline and continuing that decline for a couple of years. Obviously, this is not great news for silver investors and stackers, but I think that the analysts are a bit pessimistic in their price forecasts. We've seen that the demand for silver is going up and will continue to go up while the silver supply is shrinking. We've seen that there are inflationary pressures and geopolitical tensions around the world. Depending on when these cool down, I think that silver can go up to $30, even $35 within the next 12 months. But it does make sense that prices will stabilize and decline after that, as long as inflation cools down. Still, the current gold to silver price ratio is just under 80, which means that silver is relatively cheap compared to gold right now. Over the last 25 years, the ratio has typically stayed around levels of 65 to 70, so silver is looking like a good purchase right now, at least to me, and I'm not a financial advisor and this is not financial advice. Plus, it's important to remember that assets like silver and gold are long-term investments, so you should be prepared to be patient if you're buying in. So, that's what I've got to say about silver right now. What do you think? Are you bullish on silver or not? Let me know in the comments below. If this is your first time here, please leave a like, share and subscribe if you enjoyed the video. Thank you for watching and I'll talk to you again soon.